Hi everyone, today let's talk about the shift towards defensives and some potential strategies for the upcoming year. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So strategies for the upcoming year, definitely 2024 was a good one, but now we need to start to protect some of those gains. In my opinion, we've been talking about it on the channel for a while. Back-to-back 20% years. It did happen. It doesn't happen that often. Can it do it again? I would say probably not. But let's talk about some of these strategies here, as well as my thoughts. So they say the Easy Rider portfolio, momentum portfolio, sector momentum edge strategy, which is actually something more in line with what I'm going to be doing here for the next year, but let's talk about it. Sector Momentum Edge is focused on catching moves in high-performing sectors. This is something that I try to do. We talk about the different sectors, especially the best performing and worst performing as they happen. So something that I've been looking for, adding to my strategy for this year. They say here it had a rough December, underperforming markets, but still had a good year, up 21% versus the S&P's 24%. The idea here is that you can participate in the best performing sectors and not so much in the worst ones. You can see here real estate doing very bad, communications doing the best, financials doing very well, consumer discretionary is also doing very well. But now, as we head into the next year, play a little bit more defense. I've been advocating for real estate and things that have yields, such as utilities, which actually did have a nice year at 22.3%, which is what they say here, financials, utilities, tech, communications, best performing sectors. Try to participate in those as they go higher. Then they have the Easy Rider portfolio, which is mostly global stocks. Interesting. Not a huge fan of global. They have bonds. Been a big fan of that here recently. Commodities. Not super fan of commodities. I like things with yields. I like things that will grow over time. Doesn't mean you can't trade them. Absolutely a decent trading vehicle. Here's what they say for stocks. They do have U.S. stocks at a pretty decent weight, 30%. Again, U.S. stocks have been the best performing. Bonds, TLT, big percentage there, and then international bonds. I think there's better places to be, especially in the ETF space, but either way, commodities in there. Again, not a huge fan. And then alternatives, Bitcoin and gold. If you like it, sure, not so much for me. And then looking at how it performed, they say 10% gains. Obviously, it underperformed, but with less drawbacks and less risks, certainly with those commodities. And then lastly here, they have the Momentum Rider portfolio, trying to participate in the upswings and not so much on the downswings. And they kind of have a weird rule, 24% allocation for whatever is happening. So U.S. stocks, VTI getting it throughout the year. Same with developing markets and then emerging markets. Skipped February, and then gold skipping as well. Then the bond market, 48% for that February, and then Bitcoin getting 4% for the duration of the year as well. So interesting. We'll see. Right now their allocation is mostly in bond market as well as gold and U.S. stocks. Right now they're saying developing markets not the best place to be. Overall 15% returns. Everything did okay this year with a very positive year. But I do like this strategy. This is going to be what I'm going to do most of the year. I don't think I'm going to do 24% by any means, but want to look at these different sectors and see what's doing well and participate in those moves while they look good, and not so much when they don't look as good. Looking at Fear and Greed, we finished the week at a 32. A week ago, we were at a 30, so up just slightly, but we did have a little bit of a dip low between here and there. So we did catch a bounce this week into the end of the week. Momentum stepping back into just fear. Strength and breadth still hovering in extreme fear. Strength really not moving at all, but breadth showing a little bit of recovery here. Could be a little aggressive. Remember, we've talked about this before. If this is a true downtrend, these dead cat bounces can be very, very aggressive and very quick. So if it plays out that way, definitely want to be along for the ride, but looking for those take profits, especially if we start to see markets turn towards those lower lows. And then looking at the put-call ratio, still hovering here between the 0.6 and 0.7, not really elevating at all. So absolutely room for this to go higher if markets turn down, but volatility, neutral, turning down, not showing that same kind of fear. Safe haven demand back into sitting in regular fear. And then junk bonds actually turning into greed, showing some strength on the Friday. Moving over to the the AAII survey for the first of the year. You can see the bulls are back below historical averages there at a 35 neutral, just below your historical average, and the bears accelerating here now to a 34, which is part of why I think we might see a little bit of a bounce. The bears are accelerating just a touch, but we've been talking about this stair step and it continues to do so. So overall, medium term still looking a little bit bearish for me, but short term still looking like a little bit of a pop. Quick look at seasonality. You can see we got a little bit of a pop to begin the month, and that is what we expected. Now we're looking at a little bit of a downturn seasonally into that second week of trading. Interesting move. We'll see if that plays out. And then into the rest of the month, post-election is supposed to be a bullish January, pretty aggressively bullish, between 2 and 2.5%. I don't know how much I agree with that, but just understand that's the seasonal bias. Historically, a little bit bullish post-election. Then looking at the calendar here, nothing for the Monday. Tuesday, supposed to be a little bit bullish. Wednesday, we get a look at the first 5 days of January, that early warning of how the year is going to play out. 9th, understand that we have the federal holiday for Jimmy Carter. I don't know if that's going to close down the markets or not. My guess is that it will, and then the 10th expected to be relatively bullish. And then the next week is options expiration, so you could get a little bit of volatility here Wednesday or Friday if that Thursday is closed. And then a closer look at the calendar here for the Monday. You have Global Services PMI expected to be a pretty good number there at a 58. Would like to see that come true. And then for Tuesday, CPI Eurozone, a couple of ISM data here. JOLTS job opening, so it is a jobs week. For the Wednesday, ADP non-farms, kind of a precursor to the actual jobs data. FOMC minutes, 10-year note auction also coming out on that Wednesday. And then you can see it here, national holiday for the 9th. Still getting some initial jobless claims through your bond auction, Fed balance sheet. That has been selling off more and more aggressively here recently. We'll see if that starts to affect markets at all. But right now, the expectation is that Thursday is supposed to be closed. The internet seems to think that it will be closed, but we'll see how it plays out. Doesn't say that it's actually closed here. And then the Friday, all of that actual jobs data definitely going to be interesting. Non-farm payrolls, unemployment rate expected to be flat. The continuing jobless claims have been elevating. We've been talking about this. They stepped down a little bit last week, but the week before that, they were at their highest levels we've seen in a long time, and they continue to trend up. So is that a precursor to this stepping up to a 4.3? If it does, that is going to be catastrophic for markets, in my opinion. That could be the catalyst that shakes out this dead cat bounce, if it is truly a dead cat bounce. And then looking at Max Pain here, Max Pain is 590, current stock price 592. So a little bit of a neutral week this week, especially with all of these puts here, 580, 585, calls not till around 602. So there's a little bit of room for markets to kind of oscillate in here. The puts and calls are a little bit more balanced this week at a 1.38. Total options not a ton, but for me, this says market sentiment is more neutralized this week, if not a little bit more bullish than it was last week. And then looking at that day-to-day Max Pain, you can see up until the 10th, relatively flat here, 590 like we talked about, down just 1/3%. Slightly positive here for the 9th. Obviously, that day is going to be closed. Wonder what's going to happen with those options. Otherwise, slightly bearish here into the open of the week. And then moving over to the charts here, starting off with the S&Ps, you can see it was down about 0.5% on the week. We ended up touching that trend here and then bouncing from that level. Momentum bearish, RSI still bearish. Coming off of the positive week the previous week, we touched that level and then ended up bouncing after the gap down, finishing at the open of the previous candle. So based on this, with the wick rejection, I would be looking for a push to this trend here, which is about 0.8, maybe 1% higher from current price. Everything still looks very extended here, but this trend structure is not quite broken in my opinion. You can see we're still well within this range, waiting to see if it breaks below that or not. And we've actually been lower within this trend structure. If we did get a break to the low of the trend from here, that would give you that about 5.5% move to there. So we'll see if it plays out like that. But for now, still within this trend structure, still testing a relatively shallow dip low, waiting to see if we get the continuation to these upper levels. I don't think it's impossible. If it does, that's about 2.5 to 3% higher. And it's also interesting to see how low the volume has been over the last 2 trading weeks. Really low as we're in that holiday season. And you can see it here on the daily chart, the trend that we've been watching. Came down, touched it, key level there, pushed up, hit the 21 EMA, did close above it. It wasn't a clean setup, but we ended up gapping below it and falling from there. And sure enough, it went lower right back to that trend, double bottom in here. And then we got the big up candle closed above the bodies of all of these 3 previous candles above that 55 EMA, which is why I think we're probably going to head back to this trend here on the daily. That's about 0.75, so about 0.75%. 21 EMA is a little bit higher at around 0.9, so definitely looks like we're probably going to see that move. Momentum says this could go quite a bit higher if we do get the follow through on these steps down. RSI right at the SMA, waiting to see if it breaks through here on that Monday trading session. If Monday is super aggressive and we push into this zone and close, I think we could absolutely be looking for a continuation style move, and that's about 2.25% to that next zone, which would take us right back to those all-time highs. So something to consider. Doesn't look completely broken. We knew this was going to break down. Sure enough, it did. This retracement was more aggressive than I thought, but now it seems like we're catching the move. Clear bottoming formation, waiting to see how aggressive this rally is. And then looking at the SPY charts here just for a moment, you can see that trend structure that's in here. I added a level at 591.09 because we didn't have really anything in here. So we touched this level here, saw the bounce from there, pushed to 591, closed above that level. So now at this point, you're looking for that 21 EMA touch, which again is sitting in that 597.11 area, which gives you a pretty decent move, about 0.75%. Again, momentum and RSI show bullishness. And then looking at the Tasty charts here, you can see the last pullback where we pulled back to this 21 EMA was really these 3 previous pulls here. In April, we pulled back to the 21, rallied up from there, way overthrew it on the July pullback. This was the one that had everyone kind of scared, and that ended up being a pretty good buying opportunity, and we continued up much, much higher. And then we were very close to this kind of lower high setup in here, pulled back to the 21, ended up catching a bounce from there again and rallying through. So is this going to be another iteration of that? In theory, absolutely could be. Touched the 21 EMA, touched that zone in here, ended up rallying from there. The big concern is, of course, this big volume selling after the FOMC. It was super aggressive there. Still bullish conditions, ATR trailing stop 565.09, so haven't seen the change there yet. And then looking at that daily chart, we are in bearish conditions. We have seen this a couple of times back here in September, back here in July, like we talked about. Pulled back all the way to the 144 EMA before bouncing. So we've been in bearish conditions a few times. It's nothing crazy there. And then you can see that daily chart, 55 EMA, came in, almost touched it, bounced from there. Big volume coming through on those pushes. Came back, retested the zone, finally touched the 55. And at this point, I would call this neutral, right? So you have bearish ATR stop. ATR bands are trailing down, but the upper bands are flat. So that's kind of neutral for me. We're not seeing a full rollover quite yet, and you can see a clean bounce after not quite touching that lowest ATR band. So everything for me short term says this is bullish. Maybe we get into this ATR trailing stop zone around that 607. Again, that's in line with your all-time highs. Reject from there, and then we get a major push down. That would be very, very dramatic, but in the short term, I do expect to see a push at least to the midpoint here, 601.50 potentially, and then back into that all-time high area, certainly a possibility as well. Then moving over here to the NASDAQ, you can see we're hitting some critical zones here. We touched the trend line in here, sold off for 3 weeks, touched this lowest trend line. And I kind of did this as a bit of a rework. It's sometimes good to relook at your trends and see if it makes sense to you again. So this is where I'm at on my new structure. I have some very, very long-term ones here. You can see these go back many, many months. Zooming out to the monthly chart just for a moment here, you can see touches these levels here. Probably need to adjust this down just slightly, but they go back a very, very long time. Marks a lot of tops in here going back to 1995. This is your dot-com bubble, obviously. And then you have the most recent runs, January of 19 all the way until the top in 21, and then the sell-off throughout 22, and then the rally here from the October, November lows of 22 to current price. So on the long term, obviously still a bullish structure with higher highs and higher lows. And the month of December was technically positive at a 0.39, and so far January positive at about 1.5%. And looking closer at that weekly, you can see we touched a VWAP, caught a little bit of a bounce in there. Momentum not super great, RSI stepping down, so that's concerning. But the bounce off the trend was substantial, and I do like that. And then looking at that daily chart, again, not as clean as the SPY charts. You had a little bit of a lower low here. The RSI is not as strong on a relative basis, but Momentum stepped to bullish, big close on the Friday. Want to see that move at least to the 21 EMA at 21.5 or so. And then looking at the Qs on the daily, just to give you that short time frame here, I added a level at 519.48. Just barely touched that on the Friday and sold just slightly, but I would expect to push through there to that 21 EMA. Still watching this as a potential downtrend structure. You always have to be aware of the potential, but of course we're still looking at a double bottom here. Maybe this is topping formation. Either way, we're right at the key level. Want to see it break 519.48. If it cannot, your support is going to be 514.92, and that is the open from the 4 December candle. That's where I pulled that level from. So it's been critical. Bunch of wicks in that zone. You can see the open very close there on the 23rd. Want to see it push to that upper trend at least. And then if we get rejection from this trend, that's going to be 3 lower highs, and you would expect to push back down into the zone here around the 500 area as a potential lower low. So wait and see what we get. If it breaks out, pushing back to the all-time highs. If it rejects from here, new relative lows in my opinion. And then moving over to the Tasty charts here for the Qs, you can see right at that 8 EMA, got that touch and then closed above it. So still bullish structure on the Tasty charts. ATR trailing stop all the way down at 476, so a long way to go for that. Obviously nowhere near it. On these previous moves down, we did get into that zone, touched that ATR band, ATR trailing stop, and then bounced from there. Never closed below it. We've held bullish conditions on the weekly chart for a long time. Haven't been bearish since all the way back here in March, so it's been a strong run. Still in bullish conditions here on the weekly chart, which is what I talked about last week. Expected some kind of bounce, which did end up following through. And then looking at that daily chart here, you can see we're still in bearish conditions. Now remember, this has happened a few times. You had a big move down here, bearish conditions all the way through up until September, and then we rallied through bullishness from there. Got into bearish conditions back here mid-December, still in it, still looking for the retracement. Need to get all the way through the previous all-time high in here if we are going to get back into bullish conditions. Momentum hasn't really gone with it. Did see some decent volume on the Thursday session, and then that ended up following through to a bullish session on the Friday. So a little bit of buying volume in there, in my opinion. Still looking for a push back to this kind of midpoint on the double bottom, which would give you a rally to that 530 area. So I think there's definitely some bullishness to be had. That's about $11 higher from current, and then looking to see if we can get back to that all-time high or the trailing stop there at 542.27. Then moving over to the Russell here, you can see we did add a trend line back here. Kind of marks this kind of weird structure, previous structure before we broke out here. And then we had the really strong move on the election, and then we've retraced all of that move back down to this structure here. And now that trend is holding up. So that is your zone of support around that 220.70 level. Touch that again over the last 3 weeks. Strong bounce from that almost 1% right to that 21 EMA, 224.36. The closing price was 224.43, so just above it. Momentum not showing bullish quite yet, but I do like this as a potential bounce and push into this trend up here around 229.75, which is very close to the high from this kind of mid-July period here. So you have this zone of supply in there, expecting to get to at least that area. VWAP in there as well, 228.50. And then looking at it here on the daily chart, you can see the big sell-off that we had topped out up around this 244.46 area. That was my level. Sold off from there. Again, zone of support, 144 EMA, 219.09. Momentum on the daily looks very good, swinging towards that bullish side. You can see the breakout above the SMA on the RSI. Everything says a little bit bullish here, looking for a push at least to 229. That's the zone. VWAP, 21 EMA, previous highs right in here. That would also eclipse the kind of midpoint on this double bottom. The structure still looks very good. Short term, like this push. And then looking at the Tasty charts here, you can see same structure, same zone of support on that weekly. Touch the EMA, bouncing from that area. Good volume at the end of that sell candle. So far, we found a little bit of a bounce. Want to see it get above that 8 EMA on the weekly chart, 227.67. If we can get it back above there, that would be good. Still very bullish conditions on the weekly chart with your trailing stop down here at 206.40. And then looking at that daily chart here, again, 144 EMA, zone of support, back above the 8 EMA on the daily. You like to see that. Right now, your resistance is that 89 EMA. Want to see it get above there. That's 225.19. You do have a bunch of overhead resistance, still in bearish conditions on the daily chart. I would expect a retest of that zone though, 236.18. That's where you have to get to and close above if we're going to flip back to bullish conditions. But for now, short term, it does look bullish off of this zone of support. Nice consolidation, looking for the push out of there into the early part of next week. And then going through these a little bit quicker here, the Dow was down 0.66 right at the 21 EMA, gap to it, and then rallied a little bit from there. 426.20 was the level, closed above it there. So looking for the push up to the next one here. About 1.25% somewhere in there. 55 EMA resistance at 399.74. Again, structurally, this is a little bit deeper of a pullback than we've seen in a couple of months for the Dow. We had a big move here in July, pulled back aggressive, round trip the move. So you had a bottom in here. Once we hit that round trip move, then it was off to the races. So at this point, my guess is that we're going to see a topping pattern. I think this is probably the midpoint on a topping pattern. I think we get a couple of weeks of rallying here. Then we'll see if it's either a double top or a lower high or something like that. And then you might see this kind of trail off over the next couple months. But even if this kind of followed this pattern here, you wouldn't be falling until mid to end of March timeframe, something like that. So just keep in mind that these topping patterns on these weekly charts can take a long time. Then moving over to the ratios here, starting with the SPX divided by the Russell and the NASDAQ divided by the SPY. Here you can see the SPY did underperform versus the Russell. We talked about that topping here 2 weeks ago, and then this week we got the sell. So that made sense. Off of the 266 level, tested that level, rejected, closed below it, closed below the previous body of the candle now, looking for this to go a little bit lower. So Russell outperformance seems to make sense over the next couple days, potentially, maybe even a couple weeks. Want to see this momentum step down, something to follow over the next week or two. And then looking at the NASDAQ SPY, really minimal change, down just a quarter. Still looks like a bit of a topping pattern, so the NASDAQ might underperform a little bit, especially with the momentum stepping down there a little bit as well. So NASDAQ probably the worst of the group, Russell probably the best over the next week or two. Moving over to the SPY divided by the M2 money supply here, you can see SPY divided by was down about 0.5%. Momentum bearish, RSI bearish. It did test the level 27.25. We expected that. Touched the level. Found some support, 21 EMA still in there, hasn't closed below that for a while. We did have a brief step down in 3 September and then above it from there. Again, I've talked about this just about every video. We talk about this ratio. You can see very, very high above that 22 level. Some of the most expensive we've seen since the dot-com bubble. So still looks like a bubble to me. I think this is going to retrace eventually. It's very expensive for markets on a M2 basis, but doesn't mean that it has to flip now, doesn't mean that it can't go higher for a long period of time. The all-time high for this ratio is up at the 32 level, which is the dot-com bubble highs. So plenty of room there. We'll see if it can continue to go higher in the short term. Just looking at the chart though, it does seem like we're rolling over at least a little bit. Moving over to the Mag 7, negative on the week, 1.27. Did catch a bounce into the Friday, but momentum still stepping to bearish. RSI going to hit that SMA probably this week. We'll see. Maybe it touches there and catches a little bit of a bounce. Structurally, not great. So we were in this bulls trend here, broke below it, retested, sold off. Doesn't look super great. But just about like everything else on the Friday session, you had a nice up candle, momentum stepping to bullish. So short term, I think we're going to get a little bit of a rally. Probably has a little bit more in it. But medium term, probably going to sell off. You have some lower highs here. We'll give this some structure through the week. But clear high, lower high, waiting to see if this is a lower high. You do have the low, lower low here. It's definitely going to be interesting. But this first step to bullish on momentum with the big up candle of around 2.5% says this should go a little bit higher, maybe even retest these highs in here around the 340 area as a potential. Moving over to Apple and Microsoft here, you got Apple coming in down 4.79%. Terrible week for Apple. We talked about the doji candle at 241. That's going to be the critical level. If it sells off from there, obviously it's going to go more. But this is a big wick rejection, big gap down, big fall, close below the body of the previous candle. Everything says this should go a little bit lower in the medium term. Short term, you could see a bounce, maybe lower high setup, double top, something like that. But overall, I would expect this to go lower. You can see volume ramping on that big selling action. 21 EMA would be the zone of support I would look for, around 232.78 in the short term. So we'll see. Need to see the level break before you get into any more of a short position. If it holds here and bounces, anywhere in here makes sense. 260 is your all-time high, but right now 241.83 is the level. And then looking at Microsoft here, down 1.67%. Momentum selling off. RSI looks bearish, closed below the SMA. 413.36 is the level. Again, we added this short-term trend in here, waiting to see if that holds. 55 EMA continuing to be support. You can see we tested it back here in August. Multiple tests in here, October, November. Tested it again here in January. Waiting to see if this zone holds in here or if it breaks down and pushes down to this trend structure here. Still think this is kind of a consolidation style top. You have a high, lower high. We argued high, lower high in here, but then we took that out. So kind of looks more like a wedge pattern now, waiting to see if this zone breaks or not. Moving over to Tesla and NVIDIA. Tesla had an amazing Friday, and even with that Friday, it still closed down about 5%, as opposed to NVIDIA, which was up about 5.5% right to the level 144.42, closed above that level. That is the high from the 21 October week. Closed above that. Want to see it continue here back to these all-time highs. 149.67 is the level back from the 4 November week, and I do think this is going to go. You have a step towards bullish momentum. RSI looks good. I think this is going to swing a little bit more, at least another $5 at some point. Might pull back slightly. It did have a very strong couple days, but either way, I think this is going to go a little bit more. And then looking at Tesla here, pulled back to the trend, 8 EMA, momentum stepping down, obviously super overbought. Not something I would get in the way of. Everything still looks super bullish medium term for Tesla. You can see it's been basically straight up. We've had a couple of pullbacks, still higher low setups, and then continued higher. So do I think it's going to break down? Kind of similar to the Apple story. Maybe we get a little bit more topping pattern. Probably will go lower in the medium term at some point, but not something I would bet against, at least for now. Moving over to Amazon and Google. Amazon up 0.2%, basically unchanged on the week. Google was down about 0.5%. These actually held up quite well considering what markets were doing. You can see the trend structure in here. Did dip below it briefly, did rally back above it. Momentum still stepping down. RSI still pretty overbought, not quite there, but very, very close. And then similarly here on Google, momentum actually looks a little better. It was basically flat from last week to this week. But the problem for me is this 193.31 level. That is the high back here from July. We closed below it just barely at 193.13. If it rejects from there and sells a little bit more, 185 is my next level. So waiting to see how this goes into this zone here. And if that does happen, they would expect a step down on momentum, and then I would actually expect this to pull back quite a bit more. It's very, very extended off of that 21 EMA. That's all the way down here at 172. This can kind of trend higher as markets go lower. So realistically, I would expect this to pull back into maybe my 179.42 level if it does actually show that deeper pullback, which takes you back to this previous high as well. Fits with that trend structure. Rally up, higher high, test the previous high, rally up to a higher high if it's going to do it. Moving over to Meta and Broadcom. Meta was up about 0.8. You can see just above my level, 602.95. So that's good. We want to see the continuation here now to the trend. We were watching this one closely. I think it's got about 3% in it. That would take it close to these all-time highs, close to the trend here. The structure is okay. It's kind of hard to put my finger on. Momentum's basically flat. RSI is a little bit below the SMA, but just playing off of my rules, you got a level break, so that should pull you into a long. You also have a structure that's still bullish here, 9 EMA holding, VWAP holding, still well above the 21 EMA. EMA is stacked. Structure is still high, higher, low, higher, low. So everything still says bullish for me, even if this kind of price action's a little weird. And then looking at Broadcom here, you can see inside candle down about 0.38, and that's coming off of a touch of this longer term trend structure here. You can see we were in this for a long time, had some deeper cuts here, still higher low setup here, pushed up into that earnings, and then really strong push on the earnings. Hit that upper trend, now it's pulling back a little bit. That's usually the kind of top of markets. This is probably hands off for me, right? So you have a big catalyst to the upside, everything says super bullish, but you have clear overhead resistance. Last time we hit that overhead resistance, we ended up pulling back about 27%, somewhere in there. So if you did get another pullback like that, 27%, that's a long way down that you could be potentially in for it. Is that going to happen? I would say probably not off of their strong earnings. Maybe you find trend support in here. That's still 12% lower. Short term support, 3% lower. I'd probably wait for a little bit deeper pullback after hitting this key level up here. Moving over to Staples and Discretionary. Staples was down 1.2, Discretionary is 1.68. Still watching this 55 EMA on the weekly, 77.82 is the level. We held the lows from the previous week. We did test them. Momentum still bearish, RSI still bearish, not super great. Clear topping pattern with the high, lower high set up here. Big sell off with the low, lower low now, waiting to see if this zone holds or if we push down to 77.50. Either way, still looks a little bit bearish. Daily chart looks a little bit better. We've been talking about it. I do think this is a zone where we can find some support. It's definitely extended on the short time frames. And then looking at discretionaries, big gap down, big wick rejection. It held the trend, which is crazy considering how much lower it was on the week. VWAP down there at 217.44. Next level, 215.06. If the trend holds, you could look for a pushback here, 235. The trend for next week is a little higher, 226.94. As long as that holds, I think you could look for a push. If it breaks down here, VWAP is my next level, 217.44. Moving over to utilities and oil and gas. Utilities had a nice week, 1.3% off of that 75.47 level. The concern here is that we move up here, retest the 21 EMA and sell off from there, getting a lower high setup and then a continuation lower. But for now, it held the level 75.47. Like I said, based on my rules, we held a support, waiting to see if we can break through that 77.97 level. Potentially push back to these zones in here between 81.50 and 83. Somewhere in there makes sense for me. And then looking at momentum, haven't seen that step to bullish yet. RSI still looks bearish there. And then oil and gas had a really strong week, 5.5%. Very good push there. Momentum bullish. After these lows here, broke my level 135.07 at the end of the week. Based on that, you should be looking for a 140.88 potential in here, which gives you about another 4% potential. And then if it breaks that level, then you could be looking for a pretty significant move of about 7.5% from current levels. We've seen it before where you had an 8.25 somewhere in there, pushed right to the next level. That was another 6.5% or so. So oil and gas can absolutely do it. Coming off the 200, nice little step on momentum. This should go higher next week. Moving over to the miners here, we got RIOT and Marathon posting really powerful weeks. They've been struggling over the last couple. You can see Mara had 4 bearish weeks in a row. Momentum's still not super great, but we did throw a wick. We did get back above 1878, so as long as we're above that, we should be looking for higher highs. Want to see momentum go with it a little bit. RSI on RIOT actually looks a little better here. You can see we broke back above the SMA, which has been trending higher, so that's a bullish sign as well. And based on this kind of move, you should be looking for a push at least to that 14.18 level, which is about 15% higher, potentially. Everything looks like it should be going. And then the next level above there would be the 200 at 15.5. I think RIOT really looks the best here. Mara falling for 4 weeks doesn't make it look super great, but structurally, I like RIOT a little bit better. Moving over to 20 and 50-day breadth. Both of these looked really, really strong on the week. You can see 20-day up 55%, very strong there. Momentum stepping to bullish. 50-day touched the level, finished just barely above the open from the previous week. Everything says we're finding some higher moves there. Looking to push above the body of the previous candle, up above 26.39. If that continues here, then we should be looking for a pretty solid bounce over the next couple days. 2 potentially weeks. Remember, this is the weekly chart. If you get a couple of weeks of rally in here, that would give you about an 80% move on this, at least to the trend. Again, medium term, probably still bearish, but short term, I think we're probably going to see some rallies here over the next 2 to 3 weeks. And then looking at the 200-day breadth, we did have basically unchanged style week, down 3% or so, really in the same vicinity, touched the 52 level, bounced back to that 54 level, which was our same support from the previous week. We held it here, 16 December, bounced from there. I thought we might see a little bit more upswing there, but we ended up kind of consolidating in this zone. It's below the 144, not great. Again, this is one of those kind of medium-term indicators. Takes a long time to do it. This is a whole year of trading. This takes you back to December of 23. We were flat for a year. Now we're starting to see breakdowns in that structure. Medium term, I think this is going to go lower for sure. Short term, I think we get a little bit of a bounce in here and then continuation lower. So overall, still fits with the general thesis. Short term bounce, medium term sell. Moving over to the dollar continues to look very, very strong. We talked about it on the Friday video. Looks very strong here. Closed up 0.85, touched the level 109.5, momentum bullish, RSI bullish. The dollar can just show a hesitation here. We've had one down week since all the way back here at the end of September. Just absolutely massive to the upside. Dollar continues to be very, very, very strong. You got some trend resistance up here. That hasn't seemed to matter. We touched some levels, pull back just for a hesitation and then continue higher here. So dollar, momentum, everything looks very, very strong. Want to see this sell, give some equities a little bit of room to the upside. Maybe this is finally the short-term top that we've been looking for. But you can see we've taken out all of this consolidation here after dipping low here, pushed back into the zone, continued through. And at this point, your next level is all the way up at 111.3. which takes you back to this kind of peak zone in October of 22. Moving over to the VIX was positive, just barely 1.25%, threw another wick to that same kind of zone from the previous week and then sold off a little bit. Momentum kind of flat, RSI kind of flat, really looks like consolidation from the previous week. No clear direction on the VIX for me. Short term, I think we might touch this trend and then bounce from there, but either way, relatively unchanged, still expecting a slight push lower to the trend based on that bullish thesis. Moving over to my accounts, I finished down about $500 on the week, which was in line with markets. The NASDAQ was down about 0.75%. I lost a little bit less than that, had some good trading going into the end of the week, which allowed me to make some of that money back. Should have traded better, but I seem to always say that. Overall, it was pretty good. Like to see a little bit of a positive number there to start the year, despite being down early in the week. And then looking at the positions, Russell covered call at 223. Honestly, I should probably be a little bit more bullish there. I'll be looking to be aggressive there. NVIDIA, bought some shares on that. I think it looks very good. I think we're going to push probably back to the all-time high, so another couple of percentage points in there. I want to see that go. And then looking at the Qs, 514 covered call for $8 credit, plenty of protection, while still giving me some upside potential. Similar to the Russell, I think we're probably going to be pretty aggressive to the upside. In the short term, I think we can see some pretty aggressive rallies. So want to be aggressive to the upside, give myself room to make some money, not so much on the defensive. Once we start to see resistance at key levels, then I'll definitely flip more towards the bearish side if we see that price action supporting that kind of move. But for now, like I said, short-term bullish, but understanding that the medium term is probably bearish. Let me know down in the comments section what you think of these strategies. Are these portfolios interesting to you? What characteristics are you going to apply to your strategy for the upcoming year? Let me know. Otherwise, like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.